Even though General Motors stock is now well below its November IPO price of $33, the Obama administration is looking to sell off its shares, meaning taxpayers will take a big loss on this so-called government investment. And my freedom fighters want to know, why sell now? Here now, my Fox Business colleague, Dennis Neal, radio host and Freedom Watch regular Nancy Skinner, and the Dollar Meltdown author and radio host Charles Goyette. Nancy, to you first. Why does the president or the Secretary of the Treasury want to sell General Motors shares now? Do they think they're going to go even lower than they are today? Before you start, they closed earlier today at $29.59.
No, because the president has always said that they didn't want to be permanent stockholders of GM and that they were going to unload this. Frankly, I think they should hold on to it because what a success story this is. Even if they sold today, at this price, they'd lose $11 billion, which is more than we gave in bonuses to the Wall Street boondoggle. This industry is back on its feet. You've got the Chevy Cruze, now the #1 selling car, the Chevy Volt. You've got an industry, it's being hurt right now about gas prices rising.
Okay.
Those will go back down, as they historically do.
I
it
get
was
the
a
argument.
great deal.
Charles, if you accept the Wall Street Journal's theory that the president wants this off the table when he runs for re-election in 2012, isn't it proof that the government, when it gets involved in private industry, does not make decisions based on economics or business imperatives, but on politics?
Absolutely, Judge. This is a microcosm of crony capitalism and central state planning, and it's all motivated by the election cycle. Okay, it doesn't matter what the economics of this thing are. Let's get it out of the way so it's not, hanging around our neck before the next election. It sounds like Nancy wants to speculate in General Motors stock, and I think that's a wonderful thing. If she thinks it's going to go up, she should go out and buy a bunch.
All right.
But as far as the taxpayers go, let's not speculate anymore with any private companies with any more taxpayer money.
Do you think that...
But you didn't want him to bail out in the first place, did you?
Hang on, Nancy. Dennis, do you think that Wall Street would recommend a sell now, or Wall Street would say
a sell by an investor, or sell by the government?
Well, a sell by somebody who was worried about their own money.
Yeah, I'm not sure what the analyst consensus on it is right now, but I do know this. I do feel like Wall Street wants government as far away from ownership of major corporations. We are not Singapore, for goodness sakes, and we ought to sell now, even though it's an $11 billion loss. It's a nice round number for us to judge on whether we should have bailed out GM or not. People said we saved 2 million jobs, guys, in the car industry, and we would have lost all of those jobs. I never believed it. I think it was too expensive. The banks were a systemic risk. You needed to help them. GM was not a systemic risk.
Nancy, wasn't this really just a bailout of the unions? Wasn't this really just to help UAW?
Yes.
Nancy.
No, absolutely. What the UAW took the biggest haircut of all. They took their health care plan and invested in this. They took huge cuts. Even the executives will say out loud, have said many times, the unions helped save this industry. This is such a better investment than Wall Street
crippled this industry, and they certainly did not save it. And they finally gave concessions at the last minute when they were embarrassed publicly in Congress. Last
question on this topic, Charles. How does the government decide which industry to save and which industry to let die on the vine? They let Lehman Brothers die on the vine. They decided to save General Motors. Might it have to do with votes?
This is the future of America. It has to do with political influence peddling, connections, crony capitalism. Do we really want to go any further down this road? I mean, why don't we make Soviet-style automobiles if we want to have state automobile manufacturing or state control of any other industry?
Got it.
Get out now.
Can I respond to that, Judge? Can I respond to that?
Yes, go ahead, Nancy. We're going to switch topics. Go ahead, Nancy. Go ahead. Go ahead.
You don't think Lehman Brothers had more political clout than the auto? 1 in 10 jobs in this economy was connected to the auto industry in Detroit, including advertising that pays for the Fox News
That
Network.
is such a bogus figure.
The Constitution,
865,000 people directly.
The Constitution doesn't authorize the government to bail out anybody, whether it's going to save 10 jobs or 10 million jobs. Switching gears to someone that loves to bail people out, the Federal Reserve is starting to wonder what will happen, Nancy Skinner, when its $600 billion Treasury purchasing program known as quantitative easing will end in 2 months. Will the Fed quit printing money out of thin air, cold turkey? Or will Uncle Ben Bernanke worry his way into another round of dollar-destroying money printing, even though I teased Nancy? Dennis, to you first.
Well, I really am torn by this because on Wall Street, you want nothing drastic. You want nothing binary, up, down. You want all gradual. And so you ordinarily would say the Fed has to ease off gently, might keep it going for a while, might be really cryptic. But because of what happened yesterday with S&P and that outlook downgrade for U.S. debt, I feel like the markets and investors and the general world need a shock. We need shock therapy. And I think the Fed, when it's time to cut QE2, that'll be it. It's over. Raise interest rates a full point. I just talked to a good economist on that.
Nancy, do you think that the Federal Reserve should keep pumping cash into the economy, or do you think enough is enough? Are you with me on this? Finally, it was something we can agree on.
Well, I have to agree with Dennis that you can't, they have already factored this in. So the worst thing is to yank it out from their numbering. And,
right.
and you know what, and the problem is if they do that, the shock that will happen to the markets will worsen our problem with our deficit. And what S&P said yesterday would be nothing. You know, the market does not want us to even talk about defaults.
I got to get Charles in before we go. Dennis just made an interesting point. The Fed should reserve interest rates. Should raise interest rates. Thank you, Dennis.
A full point.
Shouldn't the market decide what interest rates are, Charles, rather than a couple of central bankers in Washington?
Of course it should. But the whole monetary system now is built on this this fiat basis. The Fed has tripled the monetary base in the last couple of years to bail out investment bankers, to do things like nationalize manufacturers and stuff. And we are just beginning to see the effects of that in commodity prices, oil prices, and more. We will all pay for this. Nothing has been fixed by this process.
We have about a half a minute left. Wall Street likes when the Fed prints money because it funnels it through the banks on Wall Street, right?
It does, and it makes stock prices go up, and it makes gold go up. And it's really great while you're partying, but then comes the hangover, and boy, is it ugly. And that's why the Fed has to start curbing this baby in now, and it ought to do it sharply, even though there will be some pain. We're going to have pain. The question is, we have a little pain now or huge pain later.
Skinner, we got 15 seconds. You get the last word.
Well, if Dennis is right and they raise interest rates, we're double-dip recession. That's exactly, we're just recovering. Let's raise interest rates and kill all the working people here and go into recession.
Got it.
Good idea.
Great. Nancy Skinner, Charles Goyette, Dennis Neal, it's a pleasure. Thank you, guys. We'll have you back again.